Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. Happy Monday to you. We're going to take a quick look at some really important stuff here today, of course, high block capital and some very relevant bybit updates here too regarding KYC for restricted countries. So if you're new to the channel, love teaching people to trade. Hope you can learn something here today. Obviously, you want to become a better trader. CryptoCash.tech is a site. We do have discounts for students, military, and third world countries. Also note, very important feature coming to our community is day trade signals. We're going to be having somewhere in the range of about 10 to 20 signals per week. Across 4 or 5 different trading pairs. Really excited for that. So congrats to our community members for remaining patient on that. Do appreciate that. But also anyone potentially considering joining, there's going to be a lot more signals, for lack of better terms. All right, so let's take a look here at Bitcoin and just acknowledge quickly first that we have a doji candle forming here today. So we closed somewhere in the range of 27.6. It's a good chance we could see further downside. The main reason why is you're like thinking, okay, well, hey, I thought a doji candle is supposed to signal reversal and we're supposed to go up from here. Not exactly. It's supposed to signal a reversal from the current trend. And the trend right now is kind of going sideways, and it started from a downward trend, right? So we could be very well working ourselves into a small type of bearish flag type of pattern. We'll look at smaller time frames to identify, but generally speaking, doji candle at this point is never truly beneficial. Okay, again, this could be the bottom, certainly hope so, but just a heads up, that may not be the most fantastic sign that we're looking for. Okay, let's jump right into the fundamentals here, because again, from a technical standpoint, of course, we're going to look at the charts and kind of understand things, but you do need to know if you are currently using Bybit, that they just required, of course, KYC. This has been speculation for a little while, but this is the official email that was received here from one of our community members, and basically just showing us that we are effectively, as of May 8th, requiring KYC for Bybit. Okay, so that's not a problem for a lot of folks, but those who are trading in the States or restricted countries using a VPN, they'll have to shift gears there. So just know, on my Twitter here, there is an available option for my partnership with BitGet and MEXC Global. Both do not require KYC in the US and essentially are very, very good options for just general trading, right? MEXC Global is fantastic, and so is BitGet. I would say both are awesome. I would, recommend BitGet just because we are running a promotion right now too, where you could get a free signal access as well by just following these instructions here and essentially using that link. You get deposit bonuses, and anyone else you refer gets a bonus too. Okay, so just a heads up on that. The fundamentals for Bybit are changing here, and unfortunately, they may not be a preferred exchange for those in restricted countries. That being said, take a look here at the information here on high block capital. What we want to look at is a few things. First of all, we're seeing with liquidations, we are actually seeing that inverse here where there's more longs prevailing, right? And basically shorts are getting wiped out. So we have more short liquidations here, but we do also have more open interest for a bid-ask spread. In other words, the difference between the bid and the ask is that there's a lot more people trying to sell right now than trying to buy. That's basically what it's saying. We also have, of course, if you're in GreedXX, kind of tapering off down in the 50s again. So if we're down this yellow area, it's not terrible, but we want to avoid the red. Okay, we saw red previously when we dipped down to like that low 20,000 range. Coincidentally, there is a CME gap at that level, but we will bridge that gap later. Just know that at this point we are looking not terrible, not great, I guess. Fair to middling at this moment because we're consolidating at that support. Now this here is the liquidation level for the last 7 trading days, okay? So last week's worth of trading, you can see there's a decent amount of volume right here, the 29,800 range, and of course right there at 27,000 even. So that little spread there kind of shows that we are range bound between 27 and 29,000, maybe even 30,000. But you got to keep in mind, we've only been this range for the last 3 or 4 trading days. And what I mean by this range is just a smaller range where the price action is no higher than about 28,000 as low as 27. So we'll look at the charts here in a minute and kind of see what that means, but that really just helps us understand that there's a lot of support at 27,000 and some resistance at 28, 29, and 30,000. So the price could literally bounce back up here, but we're probably going to see an ABC pattern here where the price is at its lowest point at an A. We will come back up to a B and then make a lower low at a C. I'll show you on the charts what I mean by that. Let's quickly take a look here at net longs. A lot of longs right now are currently, see here, 27,400. They are actually in the green. Okay, so we can see the price action is higher, so longs are effectively in the green, whereas shorts are underwater. Majority of them are underwater, minus the most recent shorts open. You can see there's a lot of shorts that just open at 27,000. right around 27.7. Okay, so that is reaffirming itself as a resistance level, so keep in mind there could be a short squeeze there, but that also implies that the price should come down because there's a lot of folks hedging their longs with some shorts at that level. Okay, so what does that mean for us here in the charts? Well, let's take a quick look and see. Just to acknowledge and refresh your memory if you haven't caught any of my recent videos, we are stuck underneath 50 on the RSI. Okay, so with us being under 50 there is technically bearish until we break back above there. I'm not confident we're going to see the price run. Okay. That being said, we also are kind of plateauing on the MACD, so we're losing that downward momentum, which is good, but we're still moving down regardless. Okay, so that does imply further downside could occur. So we have two somewhat bearish signs there. We also have a slightly bullish sign, but more so just a support level. You can see the 50-day SMA trending right there at 27,000, almost even. So what does that mean for us? Well, the price action staying above 50 is a positive sign. We lose that, there's a great chance we're going to see further downside. We could see this level of 25,300 retested. Keep in mind, 25,300 is a strong support level because it was a very, very strong resistance. If you kind of zoom out and see, we had a lot of resistance here and some resistance here as well. So it does reaffirm the fact that even though there's not a lot of volume in this area, if you take a look at the volume profile, you'll see there's pretty much nothing at all here. There's a strong, solid foundation of volume between 20 and 25,000. So the price going below 25.3 I feel is pretty low. I can confidently say that that's going to be a very strong support level if we go back down to that level. I wouldn't be surprised if we try to retest it just based on the way things are going right now, but we still got a little bit of foothold, if you will. The price isn't going crazy down, but it's not looking great. RSI is under 50 and above 30. That's a positive sign in the sense that we're slowly moving sideways, but not great in the overall sense of things. In other words, we want to be back up over 50 on the RSI to be moderately bullish on this midterm time frame. If we take a look at Elliott wave here, actually on the daily, just kind of give you perspective of where the price could end up retracing back up to, we could see the price jump up to the 0.382, the 0.5 or 0.618 Fibonacci retracement levels. Those are very common characteristics for retracement. But what I mentioned before here is that we've got this 1, 2, 3, 4, 5 pattern, right? So Elliott waves basically identified that we've gotten higher highs, higher lows, higher highs, higher lows, and higher highs, right? We've basically waved up 3 times, 3 uptrends, essentially establishing higher highs and higher lows. The downtrend, which is a very common thing that you'll see as a result of the price overextending itself to the upside, which it was, is going to come down to an ABC pattern. So we got our A so far tentatively with our lower low. We were going to establish a higher low potentially at these 3 levels, and or the price comes back down to establish a lower low. Okay, so the third wave essentially in this ABC pattern is going to be a lower low lower than the previous low. Okay, so that being said, we can expect further downside. 25,300 I think in the next month is realistic to be able to hit that, but it would make a lot more sense for us to bounce and to kind of come up to the 28.6, 29,000 or 29.5 range. Those are 3 areas in which we very well could see the price come up and then recover from there, at least recover to the downside if you're in a short position, right? So that's kind of what we're looking at there in that sense. It gets kind of convoluted if you think about the big picture, but generally speaking, there's not a lot here showing us that we are truly bullish, okay? So hope and a prayer to try to buy the dip right now and to try to take a long, because there's nothing really telling us that a long position is viable at this point, not on the daily and so far not on the 4-hour. While we had a MACD convergence over the weekend, it didn't really hold, and we're starting to lose this momentum. So in turn, this 12 could intersect with a 26 in a downward fashion, effectively giving us that MACD divergence, and that's really what most swing traders are looking for on the 4-hour. 4-hour is probably the most impactful swing trading time frame you could use, and the MACD is extremely strong on that time frame, giving you good indications of what direction things are going to head. Right now, we're losing that momentum, and it makes a lot more sense for the price to come down. Ichimoku Cloud is giving us a bunch of false positives. We don't need to worry about that right now. A friendly reminder, Ichimoku Cloud gives you a lot of false positives, or just generally speaking doesn't prove very beneficial in range-bound activity. We are range-bound right now, no matter how we look at it, between 27 and 28,000, almost exactly here. We wicked up to 28,000, got rejected, came back down to bounce off 27.1, and now we're trying to come up again. You got to keep in mind, though, we are so far establishing lower lows and lower highs. If this next high cannot get above 27,800, then the price is going to probably continue to go lower. That would make a lot more sense. Okay, so just keep in mind that's roughly where we're at. In fact, the price is kind of dropping pretty hard right now, just since I started recording this. So we'll definitely see what that looks like. But last thing we want to take a quick peek at here is TD sequential. No sequence of numbers here, no significance in the overextension. Very last thing we could look at would be our CC golden indicator, just to kind of see if we have any short entries. And it really hasn't given us many shorts There is a short back here, of course, at about 27,800. Makes perfect sense. We are overextended going into that, but this little time frame here so far is not proving to be super bullish or bearish. But again, I think the most important thing to take away here is on the smaller time frames. We're seeing lower lows and lower highs. On the larger time frames, we are seeing a lot of divergences and, of course, some resistance there on 50 on the RSI. So to me, until we get a sound closure above 28,000, I'm not going to be convinced that we're going to be able to reestablish those 0.382, 0.5, and 0.618 Fibonacci retracement levels on this next uptrend. So I would say if we continue to retest 28,000, we might be able to break it. But we've tested so far 27,100 twice and the 28,000 level once. Statistically speaking, we're going to break down a lot sooner than we will break upwards based on that potential knowledge that we have here so far. So I would just venture to guess here at this point that we're going to come down. Again, it's an educated guess. In truth, you never really know, but everything we've seen here so far is bearish. There's only like one consolation. That's like the 50-day simple moving average on the daily, if I recall correctly. It's not fantastic. You can't, that's called a hope and a prayer right there. So again, if you're longing right now and you get lucky, congratulations. But I can tell you, a long position right now does not seem viable based on the technical data we see. And on the back end too as well, high block capital, liquidation, etc. There's a stronger chance we're going to gravitate more towards 25.3 in the coming weeks versus retesting the 30,000 range. I think it's more likely based on what we see here. Hopefully that was sound financial advice, or more so, sorry, not financial advice, but sound, crypto knowledge here, trading advice that will help you kind of get better off in the right direction. Because in truth, it's not fantastic right now, not looking great. We need a little bit more consistency, a lot more volume at this level before we can really sustain it. So I hope that made sense. Thanks again so much for joining me here. Again, you want to become a better trader, cryptocash.tech is a site. Please, again, help us grow our Twitter community. Look forward to working with you, and thanks again for just watching and being an awesome person. I've actually gotten a lot of cool comments recently about the content. So thanks again so much for the amazing feedback. Greatly appreciate you nonetheless. Have a good one. We'll see you all in the next one. Take care.